Good morning. So I wanted to take a look at the current market with a strategy that was pioneered by Constance Brown with the Relative Strength Index, the RSI. Okay, so this was her basic idea. The RSI, using it as like an overbought and oversold indicator, and actually taking signals from that, it's terrible. Like if you actually do the performance examination of it, it's terrible. You'll probably lose money or at least underperform buy and hold. Okay, so what can we actually use this for? We can use it to identify trends. You see that the RSI, it generally travels in ranges depending on whether or not the underlying trend is up or down. Notice that these are going to work in any time frame. So you see if the underlying trend is up, or I put bull market here, the RSI will use the 75 to 90 level as resistance and the 40 to 50 as support. So what do I mean by that? Well, take a look at the RSI. So I'm talking in a bull market, we'll be using this level as resistance and this level as support. Okay, so in a bear market, you use the 50 to 60 level as resistance and the 20 to 30 as support. So you use the 50 to 60 as resistance and the 20 to 30 as support. And in the very middle of that, it's normally a sideways trend. Okay, so let's take a look at the Russell 2000 from a weekly, daily, and hourly view. So on a weekly chart, it's pretty much showing that we're still trying to attempt a bull market because we are bouncing off this 40 level, but the mere fact that we did not breach this 60 level means that the uptrend is in danger. So that would mean that if it ever gets up to like the 60 level again, we should start selling, or perhaps we can make a very short-term trade by just selling at resistance, which would be trendline resistance. So weekly, it looks pretty healthy. Let's take a look at monthly. Monthly, it's also pretty healthy, but we still run into this problem where we have this one divergence right here that it can only hit the 60 level. Okay, so that's something to keep an eye on. Okay, so let's take a look at the daily chart. The daily chart, this one's a bit more clear. You see that it got up to overbought, which is good, and then it bounced off the 40 level, got to the 60 level, which that should give us some concern, and then broke through the 40 level, and then didn't even get to the 60 level. By this point, we should be really concerned. And then it got all the way down to the 25 and only went up to about the 40 before bouncing right back down. And now it's coming up to the 60. So in the daily, it's showing that we are bearish. Okay, so we have that on the daily chart. Hang on. Okay, so we have that on the daily chart. If we go into the intraday chart, we can use this on any time frame, like I was saying. On the 30-day by 2 hour, everything's pointing upward. Everything's good. On the, zoom that in even more, the 60-minute, we're still in good shape. Moving even more, and like now we're starting to see a couple other things, like if we bounce off this 40 level, then that's a good thing, but we are like hitting this bearish level here and kept going back up. Yeah, the data gets more choppy as you go back in. So we have like the 10-minute, we're just hanging out in the middle of this range here, sideways movement for a sideways market. If we go in even further, it's actually showing a little more bearish because we keep using the 60 levels resistance on the 2-day. Still pretty darn choppy, but it's not breaching this lower level. It's showing more or less sideways. And then finally, on the 1-minute chart, it's honestly too choppy to read. So short term, we're looking pretty, it's showing that we're still bullish, but if we go out to the daily chart, it's showing that we're hitting resistance right now, so we should be very careful. And on the week chart, it's showing that we might run into some weakness coming up. All right, happy trading.